And joining us now, giving us a chance to catch up with him live in the combine. Matt Bennett with agmarket.net is here. And Matt, appreciate the time joining us here today on Market Talk. And I got to ask, how is that early harvest going there for you in Illinois?
Yeah, we just started yesterday. Things look pretty good to start with. Moisture content's running in the mid 20s. Gotten into some corn that's a little drier here today, but I'm not totally sure that it's going to stay this way. I mean, it's out on the edge of the field. So overall, the yield has been awfully good. I think, as you know, we've had pretty darn good weather in this part of the world this summer, and so it's not a huge surprise, I guess, that it's looking the way that it is. But right now, at the start, I'm pretty pleased with what I'm looking at.
Good deal. Well, that's glad to hear. Well, we won't keep you too long. I know you're busy, but want to talk about some of Friday's trade action. Kind of a wild, erratic day led by that wheat market. We had some pressure early on, and then wheat rallied. I think a lot of it, we found maybe some technical support that we bounced off, but also I know fresh comments from Russian President Putin about possibly getting out of the Ukrainian grain deal. It feels like that kind of gave us the opportunity to run to the upside in wheat, and that pulled corn and beans back towards unchanged on the day. Is that kind of what you saw? Would that be how you assessed Friday's action in grains?
Yeah, it'd be the same thing. I'd kind of say that, essentially with corn, we're under pressure early on. I don't think it's hard to fathom this time of year that you'd be under some pressure. You're heading into harvest, starting to see a little bit of activity, and obviously you're going to hear about, some yields here and there. And I don't think a lot of them have been real rosy to start with. So some people were expecting maybe some support, but you got to be honest that, most of the early harvest stuff's probably going to be some of the corn that maybe didn't quite make it to getting mature, just premature death. And so overall, I've got to think it's not surprising to see corn lower on the day. Probably would have kept that trend intact, but then you come in here with some support from wheat, spilled over to both corn and beans, and you're able to pair those losses, on corn. I mean, basically a mixed day with some minor losses for soybeans. So I think overall it was a win, especially going into the weekend.
Especially going into the weekend and going into next week with a lot of concern, I think, with traders about the macro markets, worried about what the Fed will do with inflation next week. I think everyone pretty much assumes a 75 basis point rate hike, but it's felt like here towards the end of the week, the markets have got a bit tired amid a lot of that recessionary, inflationary talk that is out there in the trade. And heading into next week, it seems like that might be a big focus on top of some of that harvest pressure you mentioned, Matt.
Yeah, absolutely. I think some of the macro issues have really been what's plagued us the most. I mean, ultimately, this market is worried about not only a slowdown here in the U.S., but a recessionary type slowdown on a macro, on a worldwide level. Of course, you've got interest rates going up, energy costs maybe coming back down just a little bit, but then today, earlier, whenever I was watching closely, I mean, we had crude trading 85 again. So, I think that people are concerned about what it's going to cost to do the things they want to do and what it's going to cost to finance those things, especially with interest rates continuing to creep up. And so I think we all know that the ag sector has got a particular close eye on what interest rates are doing. Yeah, they're not interest rates of the 80s, but, Jesse, a lot of the guys these days are borrowing probably 5, 10, 20 times what people were borrowing, just to put a crop out back in the 80s. So obviously the pressure from interest rates going from 3.5 or 4 to borrow money for the year to 6 or 8 could certainly be profound.
Well, Matt, thinking about this time of year as we get into harvest, I know a lot of folks like yourself. I mean, you're at the combine right now, going to be busy running around. But if they have to make any changes to their marketing plan or maybe want to work on some sales, if they're riding around the combine and they see some market moves and they want to look at their plan just a little bit, give me some risk management thoughts. Has anything changed in your mind when it comes to risk management here after this week's trade with the WASD numbers we saw Monday, the inflation data Tuesday, Wednesday? Has anything changed on the risk management front for you?
Oh, essentially the way that I see it is if you can get an early premium, if you can get maybe a dry-in deal, which is kind of what I'm working for and finding for right now, I think you've got to take advantage of it. You know, the long story short, I mean, you know, these price levels for a producer who is able to say that they've got an average to above average crop are going to be pretty tough to beat, first of all. But I think whenever you get on out past the very initial stages of harvest, it's probably going to be just like any other year. You're not going to see those early pushes. You're not going to see drying deals, for instance. And so, of course, 2 weeks from now, in my part of the world, nobody will be needing a drying deal because this stuff is going to dry down very rapidly. But I want to take advantage of any of those things that I can, first of all. And second of all, when it comes to marketing the crop, we got to understand this is a fairly tight situation. And so if the yields would happen to get pared back a little more, as some in the trade kind of seem to think, you know, as some of the early harvest results might suggest, you've got to think there'll be some support. So, you know, yeah, I want to take advantage of some of your early premiums, but on the other side of things, I think that storage could pay some dividends in the long run. So the stuff that you can't store, I'd probably be moving it. But the stuff that you can, I'll tell you what, if it's not sold in advance, you know, I think that you may have the opportunity to see a pretty good value moving out. Now, last thing I'll say is this. If you've got an above average crop, I struggle to sit here and think that it makes sense to gamble on too much of it. You know, like if someone's looking at a 220, 250 crop, whatever it might be, you know, it's anything over $6.50 piece corn is a heck of a price. So, you know, I know some folks are talking about leaving some storage empty, and if that happens, I don't think you can fault them with the kind of profit margins you're looking at.
Matt, as well, livestock trade fairly quiet on Friday. Hogs finding some continued support from the export sales reports that we finally got from USDA on Thursday, but it just felt like that some of those macro fears weighed on the livestock trade as a whole to kind of round out the week with fairly quiet action.
Yeah, no doubt about it. I think one thing you and I have talked about before is that, you know, for hogs to be supported at some of these saltier price levels, you're going to need a fair amount of, you know, export demand. And so, as you suggested, we kind of got that. But at the same time, you know, looking at the feed costs where they're at, it's pretty tough to get wildly friendly. And so, you know, it's been a bit of an anchor for both hogs and feeder cattle especially. I think whenever you look at the fats, I'm still of the same opinion I've been for quite some time, is that you're going to have awfully good value on out ways. You get out past the first of the year, and I think you could see some really interesting markets. You know, I think that your cash market's going to stay extremely strong, you know, and then you get out again in that second quarter of this next year, first and second quarter, I think you could see fat prices we haven't seen for quite some time.
Well, Matt, I know if producers want some advice, they can reach out to you and the team there at agmarket.net very easily. What's the best way they could do that, Matt?
Yeah, agmarket.net or agmarket.app, either place they can go get the information, you know, that they need to be able to learn more about what we do.
Fantastic. Well, Matt, enjoy the harvest, and hopefully have good weather through the weekend there in your neck of the woods. And appreciate you taking a few minutes to join us on this Friday, sir. Have a fantastic weekend. All right.
Absolutely, bud. You have a great weekend as well.
Matt Bennett with agmarket.net joining us here today to wrap up the week on Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.